When is the next economic data catalyst, such as Q2 GDP, that will cause stagflation to become a clear-cut reality?
Well, stagflation is a clear-cut reality if you look at the rate of change in the economic data itself. So whether you look at the retail sales number this week, which slowed in rate of change terms. So again, retail sales slowed 20 basis points to 4.7% versus 4.9 last month. The control group was down as well. So the rate of change is already rolling off its cycle peak, even on the most impressive late consumption type factors like retail sales, but at the same time, industrial production or even capex, actually within the capex report of durable goods, they've all rolled over. So the economic data is going one. So let's just draw this. So see, this is called a sine curve right here. This is called a sine curve. This is called the sine curve. What the growth data has done is it's already started to do this. Okay. Now somebody in consensus econ space would say that as long as you're above this dotted line, oh, that's good. It's still good. Keith, it's still, I have to still own stocks because it's still good. It's still good. No. What was great is when you should own stocks. When you have this, now that should be a green, that should be green, okay? You get that, right? When you want to own stocks is when the data is accelerating. You don't want to own it when it's slowing from going from great to good, okay? So write it down. When you go from great to good, that's what? That's bad. And that's what the growth data is doing. Certainly the cyclical data, and the closer you get to international data, we're talking Chinese data, European data, it's not just gone from great to good, it's actually gone from great to good to god-awful, you know, down here. If you look at Asian export data, or even German export data for that matter, it's gone negative. Not in rate of change speak, absolute, okay? So the whole world is already moving this, you know, the world's coming to realize this. The buy-siders with good performance clearly realize this. By the way, when this is happening, things that are actually still growing organically, like U.S. tech or U.S. domestic consumption plays or U.S. domestic capex plays, those get paid even more on the long side. So again, so many ways to make money on stagflation, because as the world starts to look more stagflation, they start to look for the actual organic growth that isn't stagflating too. So there's tons to think about here, tons of money to make. I'm shocked actually that I don't hear more money managers making more money right now.